and Oracle will create a user ID and hand it over to one administrator. So that administrator or a designated person can go into the application and then create their enterprise structure as required. So that enterprise structure can be dependent on the on how the business is organized into different businesses or different geographies or different business units and legal entities and so on and so forth. So this diagram is something that you have already seen, where we said that you have a Fusion database at the heart, and then you have different enterprises which are sharing the infrastructure. Different enterprises that are sharing the database and the screens and so on and so forth. So just like if you look at, think of a Gmail or think of a Yahoo Mail, where all the designated users are using the same interface. Okay, so they don't have different interfaces. They have the same screen, same fields, but only the sign in is different or the user ID is different. So same here, the screens and the forms, they are all the same. Okay, so that is why customization is very, very limited in case of a cloud, case of the cloud software rather. So only thing that is allowed is more like configuration, which are specific changes that are applicable only for the customer. Okay, so things like creating a DFF or adding a lookup value or adding some value sets and things like that is allowed. And there's limited amount of personalization that will be allowed, where you can change the order of the fields, or you can hide certain fields, or you can remove certain fields from the UI. So when we as a user, we sign in, we have to first think of what is our enterprise going to be. So enterprise is the highest level that is defined for any company. So like I said, in the database, multiple enterprise data is stored. Each user ID is linked to one enterprise. So when you sign in, like yesterday is using the yesterday sign in, when we logged in, we could access only one enterprise data. You cannot have multiple enterprises through one ID. The highest level that you define in the company is the enterprise. Okay, and all work structure, all people, compensation data that we store in the application is for a particular enterprise, for a specific enterprise. So enterprise is like a big box, you can think, and when a user signs in, they get access to one, or their access is restricted to one particular box. Suppose in our database, we have two different boxes, two different enterprises, one for IBM, another for Amazon. Okay, so the enterprise, let's say for IBM Corporation, you can define it as per your need. So you have different legal entities, which legal entities are the official organizations that are set up in the application. In every country, a company is supposed to register before it can start doing any business. So that registered entity is called as the legal entity. It might be a private limited company, it might be an INC, it might be a LLC, it might be a private, it might be a partnership, it might be a sole proprietorship, whatever it is, it has to be a registered entity. Okay. And couple of entities combined together can become a division. So if you look at this here, IBM USA, IBM UK, these are legal entities. And IBM Japan, IBM China, these are again legal entities. So Japan and China entities can be part of the Asia division. Over there, IBM India will join in, IBM Middle East can join in, IBM Malaysia, IBM maybe Philippines, and all those entities will join the Asia division. Now, from that legal entity is typically an entity that we define in finance. Okay, it has more implications, bigger implications on the finance side than on the HR side. So on the HR side, we identify a legal entity more as a legal employer. So who is a legal employer? Legal employer is the entity that is responsible for deducting the taxes and submitting the taxes to the government. You must have seen in your pay slips, you have the salary getting deducted once it becomes taxable. So that taxable salary is deposited officially by the legal employer. It is deducted by a company called legal employer, who is identified as the legal employer, and that legal employer will be submitting the taxes. Okay, and there is a separate screen where you will need to go and define a legal employer in the application. Now, along with legal entity, you have something called as the ledger that is defined. What is it, the ledger? Ledger is the books of account. So books of account is made up of 4 things: calendar, chart of accounts, currency, convention. Okay, calendar, chart of accounts, currency, convention. Okay, once again, calendar, chart of accounts, currency, and convention. Convention or the accounting method. So what is the calendar? Calendar is the financial year. In most US companies, it is January to December. Some companies have it from July to June, some from October to September. So depending on the organization, the calendar may be different. Whereas if you see the Indian entities, it is mostly April to March. Okay. Then you have the chart of accounts. Chart of accounts is the listing of all the different account codes that are to be used. Okay. Along with that, it will have the accounting flex field. Accounting flex field is the key flex field that is used to design the accounting combination. So when you define an account code in the system, we usually make it a unique combination. In unique combination of what? Unique combination of the account code, of the cost center, of the company, of the intercompany, or of any other segment that might be required. So those segments are defined as part of the key flex field in GL on the finance side. Okay, for now, just understand this. We'll talk when we talk about flex field, you will understand this a little more. Then we look at the currency. Currency is like, is it INR, is it USD, is it GBP? What is the currency of the books of account? Okay, so for example, if you see an entity like Infosys Technologies, which is an Indian entity registered in different US stock exchanges. Now, since it is an Indian entity, its main currency is INR. So when it announced its fourth quarter results last week, it announced it in Indian rupees. But when it files the return for the US stock exchange, it will have to file it in the US dollar because it is a dollar denominated company for the US exchange. Okay. And similarly, if you look at TCS or Wipro, it is a Indian entity. So the primary currency is INR. Look at a company like Oracle Corporation or Microsoft Corporation or Cognizant Technologies. They are US entities. So they are registered in the US stock market, New York Stock Exchange or the NASDAQ. And over there, their primary currency is US dollars. They also have entities in India whose currency may be INR. Okay, only the Indian business is reporting in INR currency, but globally it is converted over into dollars and reported along with the global balance sheet. Okay, accounting method. Typically, there are two popular accounting methods across the world. One is called cash, another is called accrual. The most popular one is accrual. What is the difference? Accrual method is based on the date of transaction, whereas the cash method is based on the date on which cash is exchanged. So suppose you buy a item on credit. Okay, you buy, most companies buy things on credit. Okay, suppose a company is buying 10 lakhs worth of equipment and the vendor is going to send them an invoice, and that invoice will be paid in 30 days, 60 days, 90 days terms. So that is called as accrual method. That is, you are not paying the item for the item straight away. You are only paying when you are only recording that transaction when you buy that 10 lakh worth of equipment, and you will pay it maybe after 30 days. So there again, there will be an offsetting entry which will knock off the outstanding. Okay. And in case of cash, if you buy the equipment today and pay the cash 30 days later, then the date of transaction will be 30 days later, on the day the cash has been exchanged. Okay, so cash transactions, cash accounting method is when the cash is exchanged, and your accrual method is when the transaction happens, the day the transaction happens. Okay, then you have the business unit. What is the business unit? Business unit is the internal division of the organization into operating different parts. For example, if you look at a company like TCS, okay, it's a huge organization and it has different entities internally. Okay, software development, consulting, then it does a lot of government sector work, right? So those are different business units internally. Look at the Tata Motors. Tata Motors, it has military business where it supplies a lot of vehicles to the military. Then you have the passenger, then you passenger vehicles, then you have the commercial vehicles, then you have the passenger buses, right? Nowadays, they are also doing electric vehicles. So these could be different business units. So when you define different business units, you are using that to look at how the business is getting generated from that specific business unit. If you look at IBM Corporation has software, it has hardware business, it has consulting business, it has a finance business. So all these are different businesses, but it is all done internally. The division is internal. So those are called as business units. Okay. Then you have, for each of these, each of the employees who are there in the organization, you tag them to different departments, right? They work for different departments. The departments could be finance, HR, purchasing, sales, quality, and so on. The departments could belong to one or more business units, okay, depending on the organization structure of the company. Okay. Any questions at this point, Ankita, Shivani?
Okay, I have one question.
Yeah.
So the department, these departments, right? They mostly, all business units would have their own set of departments, right?
Correct.
So if a software, okay. And when we talk about implementing from core HR side, right? The legal entity, we define the enterprise. Ledger is defined from financial side, right?
Correct.
Okay. So,
yeah, go ahead. You finish, then I will explain.
Okay. So that is defined from core, financial side. I have particularly confusion always between an LDG and a payroll statutory unit. So I don't know if you'll cover it now or you'll cover it later. Can you explain a little bit?
See, payroll statutory unit and LDG. LDG is the legislative data group. Okay. So that has all the legislative specific rules and regulations that pertain to not only payroll, but anything beyond payroll as well. So there could be some rules relating to, like in the case of UK, you have elaborate maternity and social security or the sickness leave, right? So there's a lot of rules, regulations on that side. So all that is contained in the legislative data group.
Okay.
Okay.
And where do we define that?
When you define any things on the payroll side or on the absence side, you need to choose a legislative data group to make it specific for that legislative data group.
Okay. But how do we define this rule and regulation or creation of this LTG?
No, those are provided by Oracle. So that is part of Oracle's deliverables. So when they define any of these seeded rules, regulations, like yesterday, if you remember, I was telling you about the statutory rules and things which are on top of the core layer. So these are the layers that are provided by Oracle.
Okay. Okay. So LDG is just that I use it to link in my configuration, but the setup for the LDG comes seeded by Oracle.
Yes, yes. The definition and the content of it, because that has all the different rules and regulations or behavior of those things that we are defining. Like on the payroll side, whatever we define, lot of those, the behavior of that particular entity is controlled to some extent by the LDG.
Okay, okay. And again, payroll and TRO. So again,
yes. So the statutory unit is more like the payroll entity that is responsible for doing the taxes.
Okay.
Okay. So that is more from an entity perspective, whereas the LDG is more from the setup perspective, from the application side.
Okay.
Okay. Now, just going back to that legal entity, ledger, business unit, as you can see, a lot of this has repercussions on the finance side. So typically, if there is an implementation team where, finance, HR, supply chain, all of them are there. So usually they sit as a team and they decide it. It's not like that it's always HR who is going to define it, or it's always finance who is going to define it. There should be a discussion between the different teams, because that can have some implications on the other side, to ensure everybody is on the same page, they are okay with it, because people should not be working at cross purposes, right? So legal entity like has the link to the ledger or how it is going to be used. Lot of that legal information is available actually with the finance side.
Okay. So these are prerequisites that has to be done before.
Yes, before
actually
we say, yeah, this is also part and parcel of the implementation, because when you define these legal entities, you might be defining, look at a global organization, right? Look at, a company like IBM or Amazon or Cisco, or these are all global corporations. So they have virtually legal entities in every country, right? Or a group of countries, maybe smaller countries, they might have a bigger entity, but mostly, so you could have huge number of legal entities, which all that legal information is mostly owned by the finance team, because they have to do the filing, they have to submit the returns, they have to generate the books of account and all that. So from the legal entity, the main thing on the HR side is the legal employer. Okay. All right. So let's take a real life example, you can say here, how an organization, how a company may be organized in reality. So here's an example of a company called Fusion Corporation. It has two divisions. One is US, one is UK. Okay. And the side table explains which one is an entity, which one is an enterprise, which are the legal entities, which is the the balancing segment. Okay. This is from the flex field. And ledger, which one is the business unit. All these are tagged here. Now coming back to this, these are the divisions. This is the ledger. Okay. So in Fusion America, INC is the primary ledger, which is in dollar terms. The standard accounting method is used, and the January to December calendar is being followed. So these are the different ledgers that are defined. As you can see, there are three different ledgers defined. This is Fusion America. This is Fusion Financial Services. So this one is the Fusion UK Systems Limited. So here the primary ledger is in GBP. Okay, the British pound with the reporting currency of dollar. Like I was telling you the example of Infosys Technology, registered in India, but also registered on the NASDAQ stock market. So where if they have to show their balance sheet, they have to submit their balance sheet, that is done in US dollars. So the primary ledger for Infosys Technologies would be GBP, and this would be US dollars reporting currency. Primary ledger would be INR. I'm sorry. The primary ledger, primary currency would be INR for an Indian company, and the reporting currency can be USD or GBP. If they're listed on the London stock market, then they would have to file it in the GBP currency. Okay. And BU wise, these are the different business units, like these are financial services, US systems, this is UK system. And then you have the shared services. This is also called as the shared services, where corporate administration, purchasing, HR, these are shared services across multiple business units, legal entities. So they provide their service and the part of their charges are distributed across these entities. Okay. And then you have different legal entities, which is like the US legal entity 1, legal entity 2, legal entity 3, and legal entity 4. They are also defined on the balancing segment. Balancing segment meaning they are part of the key flex field. So there would be one segment, company segment, which denotes 101. Here the company segment is 201, 202, 203. So when you generate the accounting code for US 1, US legal entity 1, all account codes should start with 101. In case of legal entity 2, all of them will start with 201, 202, 203, and so on. Okay. And below that, this is typically the different organizations that may be defined in the respective modules. Here they have given the example of the inventory organization, where there is a distribution center and these are warehouses where the finished goods are being stored. Okay, they could either be finished goods or they could be raw materials also. And they are part of what we call as the item master. Item master is the complete list of items that are defined within a particular organization. Inventory organization. Okay.
So where is department in this?
Department, here they have not shown department. Department
Okay.
should be somewhere over here, as a separate standalone, because departments are again independent of any particular business entity, business unit, or legal entities.
Okay. The Infusion United States US division, right? I was thinking, are they not legal entities or legal employees?
Which one? Sorry, which one?
The Infusion, the divisions.
Yes.
Right.
No, divisions are basically combination of the entities.
Okay. So this is one example where they have the legal entities, they have divided into multiple, like USLE 1, USLE 2,
Correct.
right?
Correct.
But it can be like only for US, it has to be one US LE1, and
Correct.
for UK, it will be UK, like
Correct.
this, right?
Correct. Correct. So here is another example. So here you have three divisions: US, Europe, Middle East. If you see here at the bottom, they are showing you the department: sales department, marketing department. Now they have also segregated in terms of the country: marketing, the sales US, marketing department US, marketing department UK, sales department France, which are also cost centers.
So here in Europe division, even UK is coming, because there is a new rule called Brexit. So even now UK comes under Euro division in this category.
Actually, this is rule in the sense, this is more company specific division. Tax reporting is the unit that is responsible for submission of the taxes. So they will report to the respective tax authorities. For UK or for a combined Europe or for France, whatever the country regulations may be.
What is the difference then a PSU and a tax reporting unit?
Tax reporting unit is a level above PSU. Payroll
Okay.
statutory unit is only responsible for the payroll side of taxes.
Okay, so basically whatever tax reporting or deduction, whatever the rules respective to any particular country, that is defined in the TRU, the tax reporting, and payroll would be one, PSU would be one, which actually do the deductions and all.
Yes, yes.
Okay,
In
and
the
these
name
are
of-
again defined from payroll side?
Again, tax reporting, again, this lies between payroll and finance. Okay, so most of the cases, what happens is the implementation team sits together and decides. Because once you decide, we have to take it to the customer and discuss with them also, whether what we are defining is right or wrong, or what they want to define, or they sometimes, they might have ideas that they want to reorg their existing system. So final decision is taken by the customer.
Yeah, but primarily who defines it? Is it the payroll consultant or core HR who defines that?
It would be from the HR side, it would be the payroll consultant who will be doing it.
Okay.
Okay. And from between, as a team as a whole, there would be the finance team and the HR team, because they need to sit together and understand, discuss where it should be and what are the implications of defining it that way.
Okay, so from core HR, and please correct me if I'm wrong. So the enterprise, division, legal entity, business unit, department, these is all which we define, right?
Yeah.
Okay. And TRU, LDG anyways, that's seated. TRU and payroll statutory units that comes from payroll and finance.
Even this enterprise that we are talking about, these may not be defined by HR also. Finance and HR together may sit and do it.
Okay. Okay. They said, yeah, yeah, I understand that it has to be a collaboration because there are many things attached to each other.
Yeah.
But when we talk about primarily, okay, whose responsibility is it?
I would say legal entity would be more on the finance side, because the implications are larger there.
Okay. Okay.
Okay. So legal entity, business unit, ledger, these are all part of the finance team's role.
So they will create it and then we will use that in our code.
Correct. Correct.
Okay. Okay. Yeah. Thank you, sir.
Okay. So if you go to yesterday, I had shown you the docs.oracle.com. If you go there, you will find more explanations around this. Okay. There are explanations for each of these entities, what they are, how they work, and things like that. So in case when you don't get sleep at night, you can read that document and you will fall asleep easily. Okay, now from an application perspective, what we discussed so far was outside the application. Now within the application, we have to go in and there are specific screens where you have to go and define, do the initial configuration. Okay, so it is called as the establish enterprise structure. So there's a wizard there, wizard meaning just like when we define a Google account or most of these online entities, they take you step by step, step 1, step 2, step 3. So here also you first define divisions, then legal entities, then business unit. Actually first the enterprise, then the division, legal entity, business unit, reference data set, and then we do the business unit set assignment. And along with that, if you need additional information on the job and position, that also you can run the configuration from here. Now, in HCM module, or specifically in Oracle HCM, they have given you two options of defining job and positions. Now, there's a lot of confusion about what is job, what is position, and do we need both? Can we use one of them? So to provide some clarity on this, Oracle has given more like a question answer tool where you can answer certain questions, which industry you're going to use it for, and in that industry, what is the typical use across the world. So Oracle will make some suggestions which you may accept or you may not accept. Okay. Broadly speaking, difference between job and position. Job is the content of your work. Position is the designation of your work. For example, job could be a managerial job, a clerical job, or an executive job. Designation, the position can be senior manager HR or vice president finance. Okay, whereas the job can be executive. So the executive role can be a vice president designation, can be a senior vice president, can be a senior, could be a general manager designation, depending on the structure of the company. Okay, and you can have certain attributes defined for the position or for the job during this the questionnaire that Oracle takes you through. Okay.
Can we have jobs without positions?
Yes, you
Is it
can
a good
have
practice?
jobs without position. Yes, but you cannot have positions without jobs.
Yeah. Okay. And what is the plus point of having positions? So if, let's say, for example, if I do not have positions, how do I maintain the head count and all those things?
You can do it at the job level.
We can do it at the job level.
See,
Okay.
position, the main advantage is the position hierarchy.